Matt, the Mortgage Guy, Mortgage Mondays, episode 95, where I'm talking about how the latest Fed rate hike will affect mortgage interest rates. Matt, the Mortgage Guy, Mortgage Mondays, episode 95. I'm talking about the latest Fed rate hike. So last Wednesday, June 14th, 2017, the Fed got together. They increased the federal funds rate by 1/4%, 0.25. Everyone knew they was going to do it, and it's the third rate hike within the last year. And a lot of folks have a misconception, or maybe they've heard incorrectly, about how that affects mortgage rates. So just to keep it really simple and really short, that short-term interest rate Fed rate that they're increasing is not the same as a long-term mortgage rate. Some people might think that, this week the 30-year fixed mortgage was at 4.125%. The Fed increased by a quarter. Now they're 4.375%. Not exactly how it works. Short-term interest rates, things that are tied to the Fed rate, like a HELOC, a home equity line of credit, those things did see a 1/4% increase. But long-term rates like mortgage, not directly tied to that. So for all intents and purposes, didn't see a huge change to mortgage rates. In the past, it's had an inverse effect where mortgage rates actually tick down a little bit. So as far as mortgage rates are concerned, that did not cause any real effect to mortgage rates. What will cause mortgage rates to increase is something that they talked about. And so I wanted to go over that real quick just to educate folks who stumble upon this video. The Fed has about $1.7 trillion on their books in mortgage-backed securities. So all these mortgages that get written get bundled up and sold as mortgage-backed securities. The biggest buyer of those mortgage-backed securities is the federal government. They've been buying about $30 billion a month in mortgage-backed securities. And so what they're planned to do is, when they start this thinning of their books, where they're going to take some of this $1.7 trillion in mortgage-backed securities and slowly take that off the books, they've put together a pretty detailed plan of how much they're going to do per quarter. They're going to slowly increase that until they have less mortgage-backed securities on their books. What does this mean for mortgage rates? When the federal government is buying less of those, there's going to be a need to cause some more demand so that other folks buy these mortgage-backed securities. And to do that, you raise interest rates, make them more attractive to investors. So that's the shortened version of why in the next couple years we're going to see a slow increase of rate because of what the Fed is doing by slowing down their purchase of mortgage-backed securities. And we could go on and on. I'm happy to discuss this one-on-one with anyone who wants to know more about what I've learned. They, as these mortgage-backed securities, the mortgages get paid off, and the Fed gets these payments from these mortgages. They've been reinvesting that money to the tune of $7 billion or so a week. It accounts to about $30 billion a month that the Fed buys in mortgage-backed securities. As they slow this down and they say we're going to buy $4 billion less per month for this quarter, and then $8 billion less per month for this quarter. I'm not sure the exact numbers, but I know that they're going to, taper it like that, where they slow down how much they're buying of mortgage-backed securities. That is going to have an effect on interest rates. So different economists say different things. Some say mid-4s by the end of 17, above 5 by the end of 18. That sounds fairly realistic, and that's probably, if I were going to make a prediction, what I would say. So that's that. That's how, these meetings where they increase it a quarter doesn't have a direct effect on rates, but the way the market moves depends on some of the verbiage, what they talk about. And obviously when they do implement this this runoff of their books, mortgage-backed securities, that will have an effect. So the plan or the guesstimates are that they might start that in September sometime later this year. Any questions at all, please feel free to reach out. Matt the Mortgage Guy, Mortgage Mondays, episode 95.
529-760-916-529-7600. Experienced and professional when you're ready to apply. Call Matt, the Mortgage Guy. Call Matt, the Mortgage Guy. When you're ready to apply, call Matt the Mortgage Guy, or visit mattthemortgageguy.com. Visit mattthemortgageguy.com.